All right, let's jump right in. Have you ever wondered what's really going on inside a business? Beyond the flashy marketing or the friendly staff? Well, there's a hidden language that tells the true story of success or failure, and it's called accounting. Today, we're going to learn how to speak it. So, let me ask you this. How do you actually know if a business is doing well? Is it just a vibe you get when you walk in, or is there a more precise way to, look under the hood and see what's happening? You guessed it. It's not a gut feeling at all. It's a story, a really detailed narrative, but it's told entirely through numbers. And accounting? Well, that's the grammar, the vocabulary, and the whole structure of that story. And today, we're going to learn how to read it. To really get this, let's imagine we're running a small coffee cart. Our story starts the moment we sell that very first cup of coffee. Every single financial event, big or small, has to be recorded. Think of it like keeping a daily diary for the business. Now, every transaction we make follows this simple three-step process. First, it goes into our diary, which we call the journal. Then we organize it in a filing cabinet, the ledger. And finally, we run a quick spell check with something called the trial balance. Let's break that down. So the journal is literally our business's diary. When we sell that first latte for, say, $3, we write it down right away. The date, the amount, and a quick note, coffee sale. It's the first raw entry, capturing the event exactly as it happened, in the order it happened. Okay, next up, we take all those diary entries and we file them away in the ledger. The best way to think of this is as a filing cabinet with a bunch of different folders. All the coffee sales, they go into a revenue folder. All the money we spent on milk, that goes into a supplies folder. This is all about organizing our story by topic, so it's easy to see the totals for everything. And at the end of the day, or maybe the end of the month, we do a quick spell check with the trial balance. This is just a simple report that adds everything up to make sure the books are, well, balanced. It's a super important check to catch any math mistakes before we start putting together the bigger reports. So, all those little daily diary entries are our building blocks. Now it's time to use them to see the big picture. We're moving on from the day-to-day details to the chapter summaries, the main financial reports that tell us how we're really doing. These reports tell our story in two totally different ways. Think of the profit and loss account like a movie. It shows our performance over a whole month. The balance sheet, on the other hand, is like a photograph. It captures our financial position at one single moment in time. The profit and loss account, which you'll sometimes hear called an income statement, answers one really simple question for our coffee cart. After a whole month of selling lattes and paying for beans and milk, did we actually make any money? It tells the story of our profitability over a period of time. The balance sheet answers a different question. It asks, as of right now, today, what is our coffee cart's exact financial position? So it lists everything we own, like our espresso machine and the cash in the register, and everything we owe, like that bank loan we took out to get started. So to really understand these reports, we need to meet the cast of characters. These are the key terms, the building blocks that make up the entire financial story of our little business. The two main stars on the profit and loss statement are revenue and expenses. Revenue is pretty straightforward. It's all the money coming in from selling coffee. Expenses are all the costs of running the cart. The beans, the milk, the cups, even the salary we pay ourselves. The story here is simple. Did our revenue beat our expenses? And this brings us to the fundamental rule of accounting. The balance sheet must always balance. Everything a business owns, its assets, has to be equaled by what it owes. And what it owes is split into two buckets. Liabilities, which are debts to other people, and equity, which is the value that belongs to the owner. Just look at how both sides of our coffee cart's example add up to the same number. They always have to. So, what are liabilities? They're just what the business owes to other people. For our coffee cart, that could be the bank loan we got for the espresso machine, or maybe the bill from our milk supplier that's due next week. Equity, then, is what's left over for the owner after all the debts are paid off. It's your stake, your ownership value, it's your piece of the pie. It represents the owner's claim on everything the business owns. And that owner's equity can change in two main ways. Capital is the money the owner puts into the business, to get it started or help it grow. Drawings are the exact opposite. That's when the owner takes money out of the business for personal use. And finally, let's clear up two terms you'll hear all the time: receivables and payables. Receivables are basically IOUs to you. Let's say a local office buys coffee for all its employees and says, we'll pay you at the end of the month. That's a receivable. Payables are IOUs from you, the money you owe your suppliers for all those beans and milk. Okay, now that we know the characters and the plot, let's talk about the final checkup. This is about understanding the single most important indicator of a business's day-to-day ability to just survive. And here's the crucial thing. Profit is not the same as cash. You can be profitable on paper but still go out of business if you don't have actual cash to pay your bills. Cash flow is the pulse of your business. It tracks the real money moving in and out every day. This quote just says it all perfectly. Profit can be played with using different accounting rules and assumptions. It's kind of like an opinion. But the amount of actual cash in your bank account, that is an undeniable fact. A healthy business absolutely needs positive cash flow to survive, let alone thrive. So we've learned the language of business, from those daily diary entries all the way up to the big picture reports. And it really leads to one last thought. These same ideas, income, expenses, assets, debts, they apply to our personal lives too. So now that you speak the language, what story is your own wallet telling?